Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 25th of February, 2018. No trade calls or recommendations. Every response for their own stuff because we're here for educational purposes only. So what's happening as we go into the last three full trading days of the month? Let's see what happens. I think, everybody's going to be talking about the fact that stocks strong. They're going to have to ramp up higher. Bonds, it's time for bonds to bounce a little bit as the positioning is really stretched to the downside. And, the usual. Let's try and not focus on the data counter too much. Let's try not to focus on thoughts and biases. Let's just look at the charts and let's look at some levels. So what's happening here? Now we've got the ES first, so looking at equities. So we had the big move down and then we popped and we said if this was going to hold, we'd expect it to, if it was going to hold for another test of the downside, it should try and hold the 50 to 61.8, even though when we're starting to see the start of big bear markets, it's not uncommon to see very, very sharp rallies all the way possibly into these highs before we actually puke lower. So as far as we're concerned, this is still very inconclusive. Clearly, we saw some very aggressive action towards the end of the week, but let's just put this in context, right? If you see essentially what have we seen here, if we just widen this out, right? 1, 2, 3, 4, 5, 6, 7 trading days where we haven't really gone anywhere, right? So we're kind of stuck inside this 50 to 61.8 zone. A lot of velocity of move inside the range, right, with the shift in dynamics towards in the opens and the closes, but really we haven't gone anywhere, right? So I think it's very easy to let your bias dictate the way you're reading this. So we're going to try and be as unbiased as possible in saying that in the last 7 trading days or so, not a lot happened. A lot of velocity of move inside range. So that's our first conclusion. Second thing, what we're going to say is that unless we break out of this 7-day range, we couldn't care less what happens. Again, it's velocity of move inside range. If we break out of this range, so that means for us a day close above or a day close below, above we would expect a very aggressive move back into the 78.6 into the 2800 level. A day close below, we would expect a very quick and aggressive move back into the 2600. That's all we know for now. Should we get one of those breaks, then those next levels are going to become the bull bear lines for the rest of the week inside these ranges. But at the moment, all we know is that we're stuck inside this range and we need to see some kind of a break. Now that applies pretty much to, whether you're looking at the ES, the NASDAQ, or the YM or the Dow. The only difference is really that the NASDAQ, as we've been discussing, has held a lot more of a bid tone, right? Much stronger. Again, we talked about it on the Twitter feed, just with that ridiculous performance by all the FANG stocks or the FANG Plus. So here, essentially, what we're seeing on the NASDAQ is that we've already made it back up to the 78.6, and and right now, we would just look at this 78.6 as being a pivotal level because here we're outside of the range already. So you would have to expect this to try and rally higher on the NASDAQ. What's interesting is that if you look at, something like the Nikkei, so Japanese stocks, they don't look as hot as the U.S. stocks. You see they're holding far heavier on these breaks. You can look at this here. You can look at this on the weekly. Or if you look at something like the DAX, they really don't look that hot. Still very, very heavy. The breaks were far more aggressive, holding below all those moving averages. So that's something we'll have to keep an eye out for. And just to get it out of the way, because everybody's going to be talking about this, essentially what's going on with the bonds is it looks like they're going to try and base. I mean, would it be healthy for them to bounce a little bit? Sure. You know, our base case last week was that we still had to probe lower. Now, if anything, you know, it's very hard to get really aggressively short here with new positions, but we would say focus on this spike, right? Any bounce that can't clear above this level is likely still going to see selling, right? And that's the ZBs, or you can look at the ZNs. It's a very similar thing. Unless we regain that 0%, unless we get through this whole area, this is likely going to be, any bounce will likely get sold again, right? And this is far clearer. You can look at it in terms of this fib we've been on for quite some time on the ZBs. So the other interesting thing really is going to be, you know, what happens on the dollar. And again, crude is really interesting. It's probably the most interesting one for us. I mean, crude's been trading again in lockstep with equities, so it just seems to be the same trade across the board now. You can plot crude and the ES together, and you see they're pretty much moving in lockstep. So the focus here is, you know, keep an eye on what's going to happen on the DXY, right? That's the big question. Here we go. So this kind of confirms what we said, or the way we're looking at this on the equities, is that this has been in a range for even longer than the equities, is that essentially not a lot is going on, right? The bulls are getting excited that it's time for a bounce, and the bears are getting excited that we've broken below the 91.00 and it has to die. But essentially, you know, we haven't gone anywhere for a really long time, right? Since you know, since we broke below towards the 20th, 22nd, 23rd of Jan, we're still stuck here. So unless we get a clear, decisive break outside of this area, it's really hard to read too much into things, right? Break above the 91, we suspect you see $1 or $2, right, all the way into this 200 DMA to come very, very quickly, right? And the move below those 88.40s, we expect to see the next buck and a half to the downside to come very, very quickly too. But I think this is another thing that highlights is that a lot of this stuff is still stuck inside a range. So no matter how hard you squint at it, no matter how many indicators you put, no matter how many time frames you decide to check, it doesn't change the fact that it's still stuck, right? And one of the most interesting, you know, it's very interesting to look at this dollar in terms of location and how it's trading. If you go back and look at the CAD chart or the yen chart, and what you can see is, just to make it very, very simple, let's see if I remember correctly, because I haven't. So if you look at dollar Canada here, right, it's stuck inside this very choppy area, but you know, dollar's getting sold again with this 200 DMA getting protected, right? And what's very interesting is you flip to a weekly. There you go. You see you've got the 200 week here. So it's really at a key zone, but you see how choppy it is? It's breakdown zone, holding back above. It's fairly choppy, but it shows you how we're at key inflection points. And on the yen, very similar. Our base case is still being that we're going to come back. We ultimately have to come back and test this 100 level. And the big question is here, can we hold the break? Now, it's sloppy because you've got a lot of different previous supports that could act as resistance. And we're really not huge fans of diagonal lines. We prefer horizontal lines. But here, this is a fairly clear. You can see it here too, right? That as long as we can hold this break, as long as any bounce doesn't really close back below the 109.50, right? As long as any bounce, then most likely this is the path of least resistance, right? That's the path of least resistance. And if we get back above the 109.50, then you would expect to see a sharp squeeze, and we would not be surprised to see those 112s, 114.50s come into play very, very quickly. So again, it's everything's kind of stuck. Everything's waiting for direction. I think a lot of people reading a little bit too much into a lot of the charts. We'll just have to wait and see. If you look at gold, what's happening on gold, again, it's kind of stuck here, right? Just not moving. Triple top, we'd expect that to break to the upside sooner or later. Our feeling here, and this is a little bit biased in terms of view, but our feeling is still that we need to see some kind of a flush here, a little bit of a panic. We don't think this low is enough, right? I think we need to see some kind of flush, or maybe we're talking our book. We'd like to see 1300 so we could get more aggressively long for that final leg. But right here, it's really not cheap enough to buy and not expensive enough to sell. And that's the case with a lot of the charts. Not cheap enough to buy and not expensive enough to sell. And if we go back to that crude, it's stubbornly holding back above this this big weekly level. So it's very hard to stay aggressively short. I think if you look at the most recent move down, let's fib this move from, so these highs into this low. First of all, this is the problem if you've got a strong bias, right? Because what you'll see even on Twitter is the guys who had a strong short bias, they were desperate to get short of the 50, right? Oh, this is going to tank at the 50. Our base case was that we needed to see an unwind because the positions were very stretched. It was just a little bit silly. It tends to correct that way, right? But that was, that was the good unwind here. Then people who had too much of a bias said, okay, that's it. It's got to complete that move into the 55. And again, we're looking for the 55. But what happens is clearly it's not, because it got a little bit of a sell, right? And then it started to come back up. And what happened? All the stubborn bears said, oh, okay, well, no, I'm not going to cover. You need to add because the 61.8 is going to hold. But this puppy's still going higher here, right? So you know what's going to happen next. If this continues to squeeze, they're going to say, well, the 78.6 needs to hold. And it might do, right? But right now, it's just tricky. So our base was still failure for a move back into 55, right? As long as we held below the 62.68, we were looking for that 55 to come fairly quickly. Right now, it's just, it ain't looking that way. Now, we'd still like to see this fail, and we're going to look at trying to find opportunities to get short. But the way this trades, for us, it's not cheap enough to buy and it's not expensive enough to sell. When does it come expensive enough to sell? Well, either if we come back into these 78.6s in this higher zone and we see some failing, or the aggressive trade would be if we get a day close back below that weekly level, the 6260s, then we would like to get aggressively short for that final move above the, for a final move back into the 55s. But as long as it's holding bid here above this weekly level and above the 61.8, chances are it's going to try and squeeze a little bit. And it wouldn't be surprising seeing the way we closed last week that equities and crude are going to try and squeeze a little bit into the beginning of the week. So again, we'll have to see what's happening. It's a little bit frustrating because broadly speaking, we're still in broader ranges. Things are starting to move in sync, especially in terms of the dollar index. So it's a little bit more interesting, but still have to say it's far from clear. The action on the Forex hasn't, everything hasn't been moving in sync all the time. So we're going to still maintain that it's a little bit of a tricky market, even though some of the moves, if they play out, will look like they were crystal clear and a gift from the gods. If you were actually watching price action every single day and trying to trade it in a responsible manner, it's been far from easy. Okay, so I hope that was useful. Wishing everybody an awesome rest of the day, wherever you may be, whatever you may be doing. Thanks so much for the liking, for the sharing, for the banter. Again, if you want me to post any chart, just hit me up on Twitter. I'll do my best. Have a great one. Take care, guys. Bye-bye.